What's going on YouTube? Dennis here, and today we are looking over my investing portfolio here on M1 Finance. So we're going to be talking about some of the different things that have been going on this portfolio. So if you haven't been following along before, no worries, you're going to be caught up here in just a moment. So here on the portfolio, you can see it's nicely named Dividend Dennis. Let me kind of move my face down here. So it's Dividend Dennis. That might change a little bit here in the future because I did some things to this portfolio that maybe some people won't agree with when it comes to being a dividend investor. But we'll see how it goes. I'll hear from you guys in the comment section down below. So you can see here, current value on this portfolio is sitting at $26,484. The last day has been pretty good, up almost actually a little over $300. Let me move my face down a little bit more. If we look at the last week, we're down about $215. No worries there because we're long-term investing here. And then for the last month, we're up about $250. Quarter, we're up about $838, and then last year we're up about $4,600. Now, if you're somebody who's a little newer to investing, fear not. If you're worried about just getting started, check this out. 2 years ago, back in January, I invested $100 into this portfolio to get started. As I got more comfortable, I put more money in, and then it grew to where you see it today. So I would highly encourage you, if you want to get started, $100 is all you truly need to really get into the market and start investing. If you want to use M1 Finance, this is the platform I use. I'll have a link for them in the show notes down below. That gets you started, gives you a nice bonus if you can put some extra money into your initial deposit. Supports out the channel, but the important thing is you actually get started with investing. And that's exactly what I did. Put in $100 and I kept growing it over time, and that's where it is today. So hopefully you guys do that if you haven't already. But let's go ahead and talk about some of the different things that are going on with this portfolio. So as I mentioned, I'm a dividend investor, but I am kind of changing my mindset a little bit when it comes to investing into dividends. Now, I personally love focusing in on companies that increase their dividends year after year, especially ones around like 8 to 10% every single year, because that means now my money's worth more and I'm getting an increase in pay. But what I am not liking as much anymore is dividends that are paying around 4 to 5% with a very low dividend increase every single year. Because first off, I don't need the dividends right now. My goal is for the future. So with my income increasing and with everything else going on, I'm going to have to pay the taxes on those dividends that I'm getting now versus, focusing in on the growth that some of these companies can have. So with that being said, if we go to activities here, you're going to see here my most recent stuff going on. I did about 23 buys and 5 sells out of my portfolio. I don't sell a lot. I don't do this very often. So this is kind of something different here on the platform. You can see there was a lot of value being exchanged here. I did a deposit plus all these changes. So let's kind of break this down a little bit and see what was going on. So I sold 5 companies. I bought into 3 new ones. So I'm actually now net down 2 additional stocks or overall portfolio holdings. So I'm actually at 25 holdings, which might still feel like a little bit too much for me, because I feel like the more I keep having, the more I have to pay attention to the news articles, the less money that gets spread out between these companies as well, which is a big deal for me now. I want to really get more into the companies that I'm believing in long term. So the 5 companies I sold were Pepsi, Realty Income, which I know is a very popular dividend stock. Same thing with AT&T. Finally decided to make the move on that one. Procter & Gamble, and then the S&P 500 index, which was the SPYG. Now, the big reason for the companies that I was pretty much selling, the actual stocks, individual stocks here, is mainly because they are paying a decent dividend now, but their dividend increases year over year are nothing to be excited about for the most part, because they barely keep up with inflation. And then also too, the thing is, the value of these stocks just aren't really doing anything honestly. Like AT&T for the last year has stayed relatively flat, and even so, if it goes back up from, I think, the $30 share price I was selling at, could go to 34, 35 back at its peak in the last couple of years, is nothing to be super excited about. And even though they were paying a really amazing yield, like I said, I don't really need that money so much. So what am I trying to do here is I'm trying to figure out ways to get into companies that are, yes, maybe not paying the best dividends now, but are having amazing dividend increases. I've talked about them before where, low yields now don't really worry me, because if they're increasing 10, 12% every single year on their dividends, that yield is going to go up. And that's called yield on cost. And we'll kind of go into that a little bit. But then I'm also into some new companies that don't pay out dividends. But I mean, Apple didn't pay out dividends at one point, and other companies didn't pay out dividends until later. So my thought process is, if I don't need this money until like 15 years from now, what if these companies that I'm investing in now that are supposed to be growth companies over time end up becoming dividend companies? I'm not saying they will. There's no guarantees of that. There's no guarantees that these companies are even going to be good in the next 15 years. But, I believe in some of these companies. I've done research on them. I've, decided that these companies are going to be worth it. So you're seeing a bunch of buys here. I didn't buy into 23 companies. Most of these I already had. But if we scroll down here, one of the big ones here is Airbnb. So I have Airbnb in my Robinhood portfolio, but I decided to go ahead and just move them over here to M1 Finance. So I'll be most likely selling off the shares that I have in Robinhood, since I'll have them in here now. And I believe Airbnb is going to be a great stock to hold long term. So that way we can, have growth potential here. But then maybe in the future, like I said, maybe they'll pay out dividends, but not 100% sure. And then if we scroll down here, close that off. Then we also have Square and Etsy were the other two that I added to this portfolio. Everything else I've already had here before, but all these purchases like the Apple and Tesla and Visa and all these other companies, this was just money from those other sales that were kind of just spewing into the rest of my portfolio, which is great because now I have more ownership. I think I'm getting close to like 30 shares of Apple, which is really awesome, especially because I've been into them for a while now. So we're building up a really solid holding into this company. Same thing with Microsoft. We're starting to have a lot of great holdings into them as well too. So it's building up this portfolio to be even healthier. So let's go ahead and take a look and show you what I mean with these companies as far as dividend increases. So we're going to go into Microsoft here. And what we're going to do is go into the dividend tab. I'm on seekingalpha.com, by the way, in case you're curious about that. So we're going to go to their dividend yield here. Actually, let's show your dividend card. So currently their yield is 0.97%. So not even 1%, but check it out. 5-year average, they're going about 10% a year on their dividend. So I like that kind of stuff because, again, I don't need this money right now. So if we scroll down here, we're going to go to where it shows yield on cost. Let me see if I could zoom in a little bit more. That way you guys get a really clear picture here of what's going on. So with the yield on cost, this chart kind of works backwards. So this is current time, which is here on the left, and then 5 years ago is on the right side. So like we said, is about like 0.97 or 0.95 if you purchased in today as far as the yield. Now, if you bought in 5 years ago, let's say you didn't buy any more shares or anything else, your yield would actually be 4.14%. So you would be in 5 years getting to that 4% goal, and I don't know why I was doing quotes, but like 4% goal of what people are trying to achieve when it comes to dividend yields, because that's like the main objective is to get to 4%. And if you're trying to reach anything more than 4%, it gets into some dangerous territory there, like 6, 7, 8%. But 4% is really solid. That's like a good benchmark. So my thing is, okay, if I don't want to pay all these taxes on the dividends now, why would I be wanting to get paid these dividends? Sure, I can reinvest them into these other companies, but I'm not getting a lot of that great growth, like Realty Income, AT&T, Realty Income had a good growth if you bought in at the dip in March of 2020, but like AT&T has stayed relatively flat, and so you haven't gotten a lot of value out of that stock. So 5 years, let's go to 10 years now. So if you bought this stock 10 years ago, you'd be at an 8.86 yield. Almost 10%. Like that is really, really good stuff. So you're like, for a lot of people, what's really interesting is that like 10 years ago, if you were buying into the stock, you weren't getting an 8% yield. You were probably getting a 1, 2, 3% yield, but because they were increasing their dividend year after year, that's where that 8%, 8.5% or 8.8% comes in, is because of those increases. Now, will they continue? Who knows? Nobody knows the answers to all those things. There's indicators that will give you ideas of if it's going to be possible. One great indicator for most people, if you don't know, is going to be the payout ratio. This is a great indicator to say, hey, is this company healthy enough to be paying out this dividend and then having a potential increase? So 30% is fantastic when the medium for most people is around 60 to 65%. So there's a lot of great stuff here that says, yes, they're going to continue to increase their dividends year after year. Maybe it won't be 10%, maybe it might be 8%. Sometimes it could be higher than that too. So we'll see how that goes long term. But that's something I've been looking at as far as better opportunity for me. So these companies, wait till I get kind of back in here. So these companies just don't provide that same kind of dividend growth level, as well as their stock has been somewhat stagnant in some ways. So if we look at like AT&T, right, very popular dividend paying stock, and there's no gripe on anybody that wants to still hold on to them, by no means. But like, look, in the last year, unless if you bought in the dip at 26.77, you're up 4.6%. And if you take an account to the dividend that you get paid out, obviously you're gonna make a decent return. But for me, like, let's look in the last 5 years. If you bought 5 years ago into AT&T, right, at $38, give or take, let's say $39, $40, you're down 23%. Now, granted, in that 5 years, you were still getting paid out dividends. So you might have maybe broken even, maybe had still made a little bit of profit, but it's not a lot. It's not that big of a deal to say, oh, look at me, I got all these dividends that you had to pay taxes on, but then the value of the stock that you're holding is gone down at this current time for somebody who doesn't need the dividends. If I was somebody who was either retired or just didn't want to work and wanted to live off of dividends, yeah, AT&T would be a great stock. Getting 6-7% on your money at this current time would be great, because then you don't have to work, you get that money now, and then you can spend it however you want. But getting 6-7% on my money now, where I have to pay the taxes, but then the value of the stock isn't really changing, like that makes it really, really tough. And then if we look into Microsoft, so that was 5 years for AT&T. So Microsoft, 330% growth, right? So that's, to me, like, oh my gosh, that's way more growth. Obviously, that's no indication that it's gonna happen again in the next 5 years. But if you're investing in the right companies, this is a good indicator of saying, hey, if I can get even close to that for the next 5 years, plus the growth option or opportunities that they've had over those last 5 years as well, like, would that not be a better option for me to get 330% in the next 5 years as far as stock value? But then what was that dividend yield right over here? Let's see. In the 5 years, you would be at 4%. Now, granted, that's not like AT&T levels, but that's still really impactful as far as, again, when you buy and when you're actually receiving those dividends. Because in the next 5 years, I'm not going to be living off these dividends. My goal is in the next 14 years or so, give or take, which, if you guys are following along or not following along, make sure you guys hit that subscribe button, because you guys can follow this journey. You guys can see the changes that I'm doing like this. You guys can see if I actually achieve the goals that I'm trying to achieve, which is, I guess, now in the next 14 years, trying to make enough money to, get, I don't know, $5, $6, $7, $8,000 in dividends, where I can use that money for travel, for anything else if I want to. Whether I decide to do that or do something else, you guys can know by, following along. And while you're down there, do me a favor. If you guys want to hit that like button, it does support out the channel and helps get this video out to more people who are also investors just like you and myself. So that way we can have our community continue to grow. Now, if we go in here, if we really kind of, I'm still not back there. There we go. If we really look at it, Airbnb is obviously a newer stock. I actually bought it at IPO, which I don't normally do with companies, but I know Airbnb a lot. I've used them. I actually do some hosting stuff with them as well too. So there's a lot of opportunities for good growth, I believe, in the company. Square is also a company that I've been following along for a long time. And then Etsy is a little bit newer in my field of view as far as a company that I wanted to invest in. I knew about them for a long time, but this was a company I was starting to do research on. And I just think that long term that they're going to have a lot of great opportunity, especially in a world where more and more people are going to be getting online and buying stuff, because it's still a very small portion of the overall spending that people do, and it's continuing to grow year after year. So in total, is this the right move? Obviously, nobody knows. I don't know. I feel like this is, a little time coming from like maybe the last few months, where I've been really considering if these companies that I was selling off were going to be worth staying in my portfolio. And like I said, I mean, I was looking at Pepsi as an example. Let's go here. So, like, let's take a look at Pepsi so you guys can see kind of what I was looking at here. So, in the last year, it's gone up really well, 30%. But if you compare that to other companies' growth in the last year, I'm like out of the frame here. It's definitely a lot lower. But like, let's go the 5 years, 33% in the last 5 years. That's on average less than 10% a year. And then, if you just look at let's go look at the dividends here. So the dividend yield is about 3%. This one does have a higher growth rate. I got to see where the last couple years were because they were pretty low, but their payout ratio started to break over the 60 to 65% on there, which is never a fun thing because that can slow companies down. Let's see if we can see what their last couple dividends were here. So let's see. Dividend increase back in May of 2020 was about 7%. So this wasn't bad, but I just didn't see the opportunity with this one the same way I saw it with like Microsoft or Apple. Obviously, Apple's another great one because a lot of people give it gripe for how low their dividend yield is, right? But like, let's look at the last 5 years, 353%, so fairly close to Microsoft. And let's look at their yield. So their yield is 0.68%. But then check this out. Let's go to the dividend yield. So let's see, if you had bought in their stock 5 years ago, you'd be getting about a 3% yield. At one point, it was almost a 3.5%. And if we go to 10 years, your yield would be about 6.73, which, again, I got 14 more years before I would really want to start using these dividends. So if they have anything similar to how they had their last 10 years or potentially even last 15 years at this point, like, yeah, 6% on my money is going to be fantastic. Like, I really want that. And the really cool thing is, because like I mentioned, because I lowered my total holdings from 27, I'm like out of the frame here again, from 27 all the way down to 25, which, it's two stocks, not a lot, but it's still enough. I'm going to be able to buy more into the companies that I'm currently holding, which is a really important thing for me too. So you can see with Apple, it's technically my biggest holding now, right over here. And I got pretty much 30 shares, right? Obviously, that's not the most in the world. A lot of people have bigger portfolios than this as well too. But, 30 shares is a good amount, and it's starting to build up even faster. Now I can invest more into it because less is going to go into some of these other companies. Look, I got 12 shares of Microsoft, almost 3 shares of Tesla in this portfolio, almost half a share into Amazon. It's taken forever to build that up. 19 shares of this company, NextEra Energy. We got 4.5 for Home Depot, and just kind of like building up on a lot more of what I already have versus adding more and more companies. Like I said, I did add 3 companies, but I took away 5. So in that way, I'm still netting down 2 total companies from this portfolio entirely. But I think with like with Airbnb, with Etsy, and Square, I think these companies are going to be poised to do really well over the next 10, 15 years. And like I said, who knows? Like, what if, Airbnb in 10 years is like, hey, cool, let's start paying out a dividend. Well, I already bought the stock, and, obviously if it goes up over the next 10 years, let's say it goes to $1,000 a share, maybe pre-split or anything like that. Well, I already bought it when it was $180, $190. And then if they start paying out dividends, I already own those shares, so my yield on cost will be much better than what the yield is at that given time. So that's a beautiful thing. People who were investing in Apple stock before they paid out dividends, same thing happened to them. If they bought in, not only did they get this amazing growth, but they also got paid out these dividends, which their yield on cost was way lower than people who were buying in at that given time. So kind of a thing to think about when it comes to dividends. Like I said, I've been thinking about this for a long time. I don't know if people are going to get mad at me for still leaving this up as Dividend Dennis, because I still care about dividends. Dividends excite me when it comes to getting paid. Like, I still absolutely love going in here, breaking this down, and then just going like, oh, cool. Like NextEra Energy paid me $587, Microsoft $487. Especially when I look at this stuff right here. Like, this is my favorite thing to do. If I go to Microsoft, right over here, my very first dividend on this portfolio was actually Microsoft for 2 cents. And then, a year and a few months later, it's now sitting at $4.87. So that's pretty cool. That's me buying more in. That's the dividend. I think since I've owned them, their dividend has gone up 2 times already, and it's poised to go up again here relatively soon, I think. But like it's working, right? Like what I want to do is working in this regard, and I think that getting rid of some of the companies that are not paying as much, or sorry, that are paying much better dividend yields now, but not having as better growth as some of the other companies, it's going to be a great way to, mitigate having to pay the taxes, because that is the thing. I had to pay taxes on these dividends at the end of the year, versus like actually going through and focusing in on growth plus dividend growth. Because, yeah, I mean, I think my yield on cost right now for Microsoft is a little over 1%, even though obviously it's less for people buying it now. But in 10 years, if they increase that dividend, I get that. So let's go back in here. Let's take a quick look. Let's let that load back up. So if we, so if we go back in here, I would like to think that, over this like next 10 years, if Apple gives out that same kind of dividend increases, like we're just going to see really, I'm like moving this thing all over. We're going to see some really cool results, increasing our, yield. And then that way, when we get paid out 10 years from now, 15 years from now, when I want the money, I can use that for travel. I can use that for leisure stuff as well. I guess leisure and travel might be the same thing, but it's all the same there, because that's what I want to do. I want to be able to have the opportunity to not work if I don't want to with dividends. And that's the way I think is going to work out for me, instead of getting those dividend yields now at the higher rate. You guys can let me know in the comments, like, what do you think this option might be? Like, if you disagree, that's totally fine too. Everybody is allowed to, let me get back here, allowed to, have their own thoughts and their own decisions, because it is your investing that you're doing, which I think is very important. Like, always make the decisions for yourself as far as, what you want to do, how you want to run your portfolio. I know sometimes people like to follow other YouTubers as far as what their portfolio looks like. I know some people like to follow mine as well, and that's fine. Just make sure you're doing that extra research. Make sure you're understanding the stocks and the risk tolerance, because my risk tolerance is different than yours. But, I always mention this as well too, that the most important thing you can probably do is constantly learn, experiment, test things out, and, keep on moving forward. So the best thing you can also do too is watch my next video right over here, so you can keep on learning and growing with your investing portfolio. My name is Dennis, and I'll see you in that next video.